So the second very important question to ask would be how much coverage we need. Again, when we move on to our chart, right, how much insurance do we need upon our demise? This is something that can actually be calculated, and we use a case study of Peter, right, who is a 45-year-old male, and he has one child, and he earns about $10,000 per month. If his living expenses is about 7.5K, we can just take a simple calculation to find out how much he needs should Peter unfortunately pass away. So if his son is around 10 years old and has about 15 years old until he's self-sufficient and has a job of his own, right, we need about 15 years to replace Peter's income. And so if we take 7.5K multiplied by 15 years, multiplied by 12 months, we actually get $1.3 million that is required to replace Peter's income should he unfortunately pass away. Now, Peter will also need to provide for his son's tertiary education. So if he's looking at something like medical school, he should put aside around $177,000 of funds. And ideally, he should also pay off his home loans and liabilities so that his dependents are not settled with all the loans that he left behind. So by just adding up all these costs, we can see that the total capital is around $2 million. But Peter has existing insurance of around $600,000. And he also has some assets like cash savings and investment portfolios of about $400,000. Now, we will recommend you to actually take away property, residential property from your current assets, because when Peter passed away, his dependents will actually still need a place to stay. So it cannot actually be used to replace his income if he passes away prematurely. So if we take his needs of $2 million and we take away his current assets and insurance of $1 million, he will require around $1 million of coverage. And that is the amount that he can look at to buy when he's shopping around for his insurance needs.